What's up, YouTube? Welcome back to the channel. Thank you so much for jumping into another video. My name is Josh, and I'm just your average Joe day trader. Well, it is Tuesday afternoon. The market is closed. It's about 4:38 p.m. Eastern Standard Time, and I'm just going to tell you, well, if you were in this market with me today, you know that it could be called Bloody Tuesday. It was a sea of red today. Unbelievable. The S&P 500 showed us the pullback we have been talking about for the entire month of September, and it finally pumped through into October. And there were a lot of things, a lot of factors that affected the market today, none of which really made a whole lot of sense. But at the end of the day, we did have a significant pullback today with the S&P 500. So to kind of share with you a little bit about the market news before we get into actually talking about results, all three, the Dow, the NASDAQ, the S&P 500, all have basically snapped out of, we're calling this bullish winning streak. And some people even have gone to the extent to say this could be the beginning of the downturn. I don't necessarily believe it's the beginning of a downturn. I believe that a healthy, strong bull market can't be bullish every day. There has to be some bearish days in a bullish market in order for the bullish market to breathe and to continue to be successful. So we really believe that by what we're seeing is that the market is pulling back a little bit. It's taking a deep breath, which anytime you look at a market that pulls back, usually it responds with strength. It comes back stronger. And so personally, not financial advice, but in my opinion, much of what you saw run down today is going to run back soon. Now, I can't say tomorrow. I can't say the rest of this week because we don't really know. We have to sort of see what the sentiment of the market is right now. What you're seeing right now is this fear factor. People that see a red day and all of a sudden think, I got to sell everything, get out of everything, hedge things, put my money back in the bank, come back to powder, and sit on the sidelines and wait. But what you don't realize, and what I have shared in many of my videos, is a day like today, and I'm going to share with you one of my plays, but a day like today is when the wealthy eat. It's when the wealthy buy the dips, they buy the bottom. Now, could we have another pullback day tomorrow? Yes. It's interesting. I had a gentleman that I trade with tell me today, Josh, your trading style sometimes doesn't fit the market. I'm like, what do you mean by that? He's like, because you like to go heavy. You'll buy 1,000 shares, you'll buy 500 shares, you go in heavy right away. And I'm like, well, that's true, because if I'm gonna, put $10,000 in, that may potentially only give me two, three, four, $500 in profit. I'm going in heavy. I'm not going in with 100 shares to get $10 out of it, right? But what he basically said was, there's two schools of thought here, and I follow both of them. Some I go very heavy, some I average dollar cost in. So what does that mean? Well, that means I may buy a stock at 250 shares. It might cost me $2,500, right? Let's just use a nice even number. And then it starts to come down. It pulls back. Okay. Well, instead of having 1,000 shares in, pulling back, that I'm chasing the 1,000 shares back, I bought 250 shares. And now that it's gone down, I may buy another 250 shares. So I'm cost dollar averaging down. So I went from $1 to 75 cents per share as an average, right? Well, let's say it continues to go down. I may buy another 250 shares. In other words, I continue to bring it down, because when it turns and it starts to run back up, I'm going to make a higher profit in more shares, but I'm not chasing it all day long or a couple days long, or swinging it, waiting. Say it's down $500. It may not go up $500 in a day, right? Elevator down, escalator up is what we say about stocks. So now I'm not chasing it up $500. I've averaged down the whole way, where now I may only be chasing it up $100. And once I hit the $100, I break even. Now I'm in profit for the rest of the way. Yes, that is one school of thought. The other school of thought is I go in heavy because I know it's green. I've already watched the stock. I've seen it open. I've seen it hit its bottom where it takes a bounce. It's on its way up. I go 1,000 shares in. I scalp it or snipe it, whatever you want to call it, and I get out quick. I'm not living in those stocks. I don't want to live really in anything past the day. But there are some that I do live in the day, because it drops and I dollar cost average down, and I'm going to live in it until it recovers, because I know it recovers. Here's a key to my trading strategy that I haven't shared in a long time. Don't buy junk stocks. Don't buy garbage. Buy the stuff you know, the stuff that are good companies, solid companies that have good patterns, have good results. They're showing you good trend lines. You can go back in the chart for months on end and see a successful run. And it's a good company that's doing something good in the market, not these garbage stocks that I tell everybody all the time. I have several people that trade with me. They wake up in the morning, the first thing they do is they go and they look at the scanners. Now, I've told you, I've admitted, I love a scanner play. You throw four letters at me, and it's a dollar something stock, and it's up by $2, and it's still running. I'm going to jump in it real quick with 100 shares for the fun of that, right? But I'm not going to drop 10,000 shares in something like that. Although I know there are YouTubers out there. I think Ross Cameron's one of those YouTubers. He'll drop $10,000, $50,000, $100,000 on a scanner play to snipe and basically scalp it. And you put 100,000 into something, it goes up 5%. That's huge money, right? Life changing. But you got to be smart, and you have to come up with your own strategy. All right, I've just spent almost 5 minutes talking about that being on a soapbox. Let's get into the news. Trump is threatening no back pay for the furloughed government employees that are not working right now because of this government shutdown. He's basically said, I'm not going to pay you. You don't get back to work. You don't want to work. You don't get paid. You see, when there's a government shutdown like this, where Congress cannot agree on passing a budget or passing a bill or passing something that causes this government shutdown, everybody goes home. They're not working. And they know that once the government opens back up, they get back pay. This is not uncommon, but it's kind of unusual, right? If I tell my job, hey, I'm going home this week, I'm not working this week because I don't like your policy, so I'll be home. When you change the policy, I'll come back to work. I'm not getting paid for the week. I'm eating peanut butter and jelly sandwiches at home, waiting for my paycheck to come after I start working again. So I don't disagree that if you make a decision to shut down the government. Now, I will also say, I know there's going to be some comments in here at me and about this. These employees, do they have a choice in that the government shut down? No, they don't have a choice. So I understand, I comprehend why they would get back pay, because they're not the one that have made the decision that they're not going to work. So I totally get that. So we'll see what happens with all that. Okay, just wanted to throw that out there to you. What else do we have in the news? All right, Tesla. I'm just going to share this. This is one on my plays today. This was one that you could say is part of the day trader journey. All right, I like to trade the leverage 2Xs. I like to trade the ETFs. I like to trade those stocks that, when I know my data, my technicals, when I know my charting, and I know that if it bounces 3 times on a support level, that it's going to turn around, at least potentially make it back to the next resistance level, I'm going to trade that, but probably in the ETF where it lives, or I'm going to trade it as a 2X. Okay. Because the payback is so much more significant. You buy a stock that's worth $5 a share, that's a standard common share, and it goes up. Maybe it goes up to $5.50, maybe it goes up to $6. You buy a 2X that is connected to that common share, and it's at $3. Well, it's going to go to $6. It's going to go to $9, right? It's going to go up much more significantly or faster. The elevator goes up and down on an ETF or on a 2X leveraged stock. On a regular stock, it's got a slower movement up and down. But I like to play the ETFs. I like to play the 2Xs, because if you're charting properly and you know what you're looking at, you know where to get in and out, then you shouldn't really have any major issues. So I will admit to you that I had some fun today. Not all positive fun, but I chased Tesla all day today. Tesla today released 2 new vehicles. They revealed a cheaper Model Y Standard. That's what they're calling, quote unquote, the Standard. It's a stripped down model of the Model Y, and it's going to start at $39,990. Okay, that's what they say is under $40,000. $10 under. $39,990. Cool. Thank you, Tesla. They also came up with a second vehicle that Tesla introduced, and that is their Model 3. So let's go back for a minute. I'm not a Tesla expert. I don't own a Tesla. I don't even have a fully electric vehicle. But Tesla, these two vehicles, right? So the Model Y, it's a rear-wheel drive, starts at $39,990, has an estimated range of 320 miles, and it comes with standard 18-inch wheels. The Model 3 standard comes even cheaper. That is starting at $36,990, and it has the same range. It can go up to 321 miles. Now, while the Model Y is standard, while the Model Y standard's available for November, December delivery, the Model 3 standard is going to arrive a little bit later with the December, January delivery range. So you would think, hey, this is some good news, right? I actually made the decision to do some plays today on Tesla based on two things, and I'll get to the other thing in a minute. But one was this result of news coming out, a catalyst. But it caused the stock to go down 4.45% today. So I was chasing Tesla stock today. And again, I'll get to that in a second. The second news, the second thing about my decision about Tesla was I watch Chris Sain's videos. I like Chris Sain's YouTube channel. I think he gives really good information. He flat out said, Monday, gap up day for Tesla. And it did. And I played the Tesla ETFs. I played the Tesla leverage 2Xs. And I made a boatload of money on Tesla yesterday. Today, he said on Sunday night, Tesla on Tuesday is going to run down, run red. You probably won't catch it. So be prepared for a gap up and a gap down. Okay, well, on a gap down day of running red, I'm going to play the other side of Tesla. Let me just go straight into this and show you real quick here what that looks like. All right, so on my watch list, I think I went over this the other day. On my watch list, I have my Tesla runs. All right, and Tesla, I always have the SPY, S&P 500, which you can see, brutal, bloody day today. But then I have Tesla's main, 433.09, and you can look at this. Let me go to the 15-minute. You can see that it just literally had a nice run up today, and I was thinking like, oh, maybe this is going to be a pretty powerful, positive day for Tesla. So I got into the TSLT and TSLL, and I ran that one up. And then as soon as I started to see this turn and the S&P 500 was running down with it, I got out. So I made money on the up, jumped out of it, and then it ran down. Well, on this run down, I jumped into TSLQ and TSLS because they were on the down. And that's where you make money in Tesla, is on TSLQ, TSLS. So let me just show you. See how this is a down pattern. You go to TSLQ, then you have the opposite. Okay, it's like an inverse play. It's going up while Tesla is going down. Same with TSLS. While Tesla's going down, TSLS is going up. So basically, you can decide which direction it's going and get in the opposite one to make the money up or down. And if you're an options trader, you can make decisions on that as well. But anyway, so that's the main. Tesla ran down. Well, I jumped in, made money on the down. So I stole money going up, I stole money going down, and then I got back in here going up, and that's when I got in TSLR, which is more aggressive. You see it's more expensive, $31.93, and TSLR runs with Tesla. So Tesla's running up. See, you couldn't even tell I changed the chart, 433. TSLR running up, 31.93, 32.24 in the aftermarket. So it ran up. Well, I was in it and ran up, and then guess what? A lot of these, you got to keep an eye on them. I was figuring, okay, we are done with this S&P 500 breakdown. We did hit some good support levels. It bounced, it turned, it was running back up, and it was. But then the news pretty much came out about these cars. And I'm shocked. I don't understand why. But TSLR spent the rest of the day dumping. So I'm down about $900 right now in my TSLR. Not too bad, right? But it's $900. So am I worried about it? No, I'm not worried about it. You know why I'm not worried about it? Because it's Tesla. It's Tesla. It's not Tonka, that a toy company will go out of business tomorrow. This is Tesla that's coming out with new robotics. They're coming up with air-cooled systems for batteries. They're coming out with, they're working with Saudi Arabia. They've got all these very positive things going on. And think about SpaceX, which even though SpaceX is not incorporated in the Tesla stock, it sort of is. It does cause Tesla to run up or run down. So anyway, I was chasing Tesla all day, and then I stopped chasing Tesla. And instead of getting out and pulling profit, I was a bit greedy and it ran back down. but I'm not worried about it because look what it's doing in the post market. It's already made its turn and an abandoned baby, and it's coming up. It closed at 31.93. It's at 32.24, and I'm not that far off because I dollar cost average down, but I am down about 900 bucks. So it will recover, and I'm very happy and excited because I know it will. It just sort of sucks to have to chase the stock back up, right? And you all, I think, can understand that. You buy a stock, you think you're doing well, you don't take profit when you see profit. You decide to stay in it. It runs down, and so now you see it run down. You don't set a stop loss, which I don't set stop loss on several of these because this is not something I set a stop loss on. This is something that I know it's going to return. I know it's going to come back up, and so bottom line, it's going to come back up. But now you have to be patient with it, right? So I'm going to chase it back up. But I'll tell you what I am going to do is when I see this turn and start going up, I'm getting into some of the other ones, okay, that are going to be running up because I still have TSLT, I still have TSLL. Now, some of you right now that are options trader are saying, Josh, this is stupid. Why are you not just buying calls? Why are you not just buying puts? Because I'm learning that whole process. I'm just getting into the whole options game. I know it's much more risky. And the thing about TSL anything here, Tesla anything here in my watch list is if I buy $10,000 of Tesla TSLR or TSLT or whatever it is, and it drops $1,000, I still own $9,000 in shares. Okay. You buy options calls and it goes down, you start losing the gamma, the theta, all those things that I'm trying to understand and wrap my head around. Your value of your stock starts going down to a point where you're losing money no matter what. Okay. I'm in some lift plays right now. They're losing money no matter what. I'm trying to work with the people that are helping me explain to me why lift is up way up above my $18 strike price, but I'm down 150 bucks. Well, it's because over time, as you get closer to the expiration date, you're losing time on it basically. So, and this is not an options lesson because I may clearly have no idea what I'm talking about. And I'm sorry for the honesty, but this is the truth. I'm just sharing with you average Joe day trader journey. Okay. So a couple of really good things to be looking for right now. I will be looking at tomorrow, aside from chasing my Tesla stuff, but tomorrow I'm going to be looking at a couple different things. One is APLD. All right. APLD came down 26.31. It came back up. It closed at 27.30, sitting at 27.37. I'm expecting a little bit more of a pullback. And listen, it hit $29.89 today. It almost hit $30. If I can get a little bit more of a pullback, and look, I know a lot of times we don't talk about my specific support and resistance levels, but look how I charted this one. Here's one of my levels. So this is a support level. And look what it did, even in here. It did break it, very small break, 26.31. Okay, this is 26.33, but I would call that a win. It came down, rejected, pushed it back up, rejected, pushed it back up, and then it went back on an up run. And now look, it's up here. Okay. My next goal is to stay above 27.03 for tomorrow, and I'm going to do the box strategy on this and run it all the way up to 28.43. I wanted it to pull back below 26 to about 25. A couple words of caution to you. They do have earnings on Thursday the 9th. It may be on Monday the 13th, but we believe right now they're pretty set for earnings call on the 9th. I'm not sure what APLD is going to do in earnings, and that's just being totally transparent. I think that the earnings results will be good, but you also have to know that in September they filed and they're going to dilute shares, and that's going to probably happen after they give their earnings report. Now, if it does dilute, I'm sorry, you get me to 18, 19, 20 bucks. A lot of my powder goes into APLD because it's already proven to us that it's going to get, it's already proven to us that it's going to get to $30, okay? So just keep that in mind, but be cautious, be careful in APLD. Still absolutely one of my favorite stocks. What was that we clicked on? My goodness, look at JOBX, J-O-B-X. This is the Joby 2X that I was talking about in ETF. Wow, market closed, it dumped. I wonder what Joby's doing. Now, this is not research. This is you seeing this live with me for a minute. Joby 2. So here's what I'm going to tell you about Joby right now. We don't know what's going on here. Why did they dump? I'm going to have to do some research into this, but what a great buy opportunity. It's at $17.22 right now. And look, you already have the making of the first green candle, which means buyers, even in a post market, may say, hey, I'll buy Joby. I'll buy it at $17. And the reason why is because it's been hitting $19, almost $20. All right. Okay. That was totally like I don't even know where that came from. I hit it by accident. All right, I do want to share this last one with you. I'm not going to go through every stock with you because I would be depressed, and many of you would be depressed. But I want to show this one to you, and it is QBTX. All right, listen up, everyone. QBTX. Let's go to the daily. You don't even need to see the daily to see what I'm talking about yet, but let's go to the daily. All right, QBTX is basically QBTS's 2x long. QBTS. Now, a lot of people have been going nuts over QBTS. Okay, this is D-Wave Quantum, and it has been performing unbelievable. Yes, did the market pull back today? Absolutely. Do you think that this today market or tomorrow, a pullback tomorrow, is going to cause this thing to shut down and run all the way back down to here? No. $14. This thing is an incredible run. Pulled back down here to $24.94. It's all the way up here. This is at QBTS, okay, at a high of $37.90. Okay, it's at 35.64 already. Great opportunity on this one because you go to the 15-minute where I love to live, you'll see that it did drop down and then it pulled back up and now it's running horizontal. So personally, what do I believe? I believe that QBTS, if we don't have another pullback day tomorrow, and this is not financial advice, but I believe it's going to recover back to where it was and continue. So it could potentially recover back to this $38 range from this $35, $36 range, $2 a share at the opening bell tomorrow. We're going to see what happens. This is a 24-hour stock. Let's see what it does through the night. Now, let's go back to where I was, okay? Because what I wanted to really show you on this is, as I've already shared, I like the 2X's. So I am in QBTX, which is that 2X long. And if you look and see, and let's go to the daily, because I'm going to show this to you. It's following the same pattern. Go figure, because it's exactly the same, but it's a 2X long, and it elevator up, elevator down. That's all I'm going to say. Be super careful. But I'm in this, and I bought this one at the dip. Let me see what time this is. That's the daily. Hang on, let's go back to the 15-minute. I bought the dip. I got in halfway point somewhere about here when I saw this one, and it kicked back to green. The buyers pushed it back up. That's about 12:30, maybe a little bit. Yeah, somewhere about there, about 12:30, 1 o'clock today. I bought back in. I didn't buy back in. I bought in. And I'm not a whale. I bought 25 shares of this stock, okay? I bought it at about 308, 309, somewhere in there, okay? Look, it closed at 318. It's in the aftermarket of 313.98, but man, this thing is a tiger, all right? I do believe at market open tomorrow, if we have a green day, this fires back up, and look where it was, 356.75. Now, don't go running and jumping into this without doing your own homework, without doing your own due diligence, without looking at the charts and understand your support and resistance levels, okay? This is a play that is a dangerous play, but it could be also very rewarding, and the risk is worth the reward for me on this one, because even if it pulls back $1,000 or whatever, $2,000, then at some point it's going to continue to run. And when you look at the daily or even that 4 hour, and you look at this beautiful run, okay, yeah, no, this is incredible. So take a look at it. Very expensive play, but very excited about it. All right, listen, I want to share real quick. We have a membership button. Hit and join the membership. We have 2 levels. You can join the entry level position. You're going to see me talking more in posts. You're going to get some different information through the posts. I'm going to do some live videos where I talk through charting, and I put that out during the week. You can ask me comments, and you can ask me questions, etc. And I'm basically providing some additional things that subscribers are not normally getting. And then there's the elite group. What is awesome about the elite? I've already heard from many people. The elite gets you in the Discord. Now, what is the Discord? Are you watching me live trade? No, you're not watching me live trade. Are you watching me and having call out, get in here, get out here? No, you're not seeing that. But you're joining a community of traders, of great people that are sharing all their plays, sharing what they're hearing elsewhere. Here's what I'm getting in. Here's where I'm getting out. Here's how much I made. Thank you, God. Here's the play I'm getting into. Here's the call. We have an options playground room. We have a no financial advice calls trade playground where you can go in and just see what people are trading and put in what you're trading to help other people. It's about building this community. The elite Discord membership, yes, each one of those levels you pay for, but it keeps and weeds out the people that want to do harm. And we've already had that happen, been cloned the account, cloned me, trying to basically scam people out of money and all that. If you join, become part of the Discord, you're going to be able to see the different plays, things that are going on. I'm in there sharing what I am, researching and where I am getting in and out myself, to help people understand what I'm looking at. But that is a great opportunity to get in and see what other people are doing. Give it some consideration. Would love to have you as part of the Discord. If it's your first time visiting the channel, thank you for being here. Hit the subscribe button, hit the like button, hit that notification bell. Thank you for joining us for this episode of today's crazy market day. Looking forward to seeing what the market does tonight. It's tomorrow morning when it opens back up at 4:30 in the morning and the 9:30 bell. See you tomorrow. Josh out. Peace.